Hello everyone, how's it going? In this video, we're gonna talk about Palantir, trading under the ticker symbol PLTR. The financial market has been going through a very volatile period of time, and one of the most talked about and sought after stocks has been Palantir. So in this video, we're gonna go through what the company does, what it represents, the recent price actions, the company's financials, and my recommendation on what you should do with it. As always, if you like what I do, please consider to drop a like, subscribe to my channel, and check out the links down in the description. So, Palantir is a company that people have a lot of hope for, not just for their own pockets, but the economy overall. We all know that data is one of the most precious and least understood resources that corporations have. And what Palantir wishes to accomplish is to make use of digital footprint left behind by users and stakeholders to help companies to make better decisions. Palantir is also known to be very well introduced in the public sector, with some of their biggest clients being government departments in defense and law enforcement for the most part. I initially wanted to say healthcare, but recently the British NHS pulled out, so for now I'm going to leave that on the side. So the reason why Palantir is kind of unique in the sector is because those contracts tend to be long-term. They have guaranteed cash flows, and they're a testament of deep, long-term relationships. With that being said, the very nature of the company's business model has put Palantir in the tech sector, of course, and marketed as growth stocks that will use its resources to grow and to give investors like exponential returns in years to come. This is typically something that investments in tech startups would promise, and they have also delivered on some of that promise. For one, the revenue of Palantir did grow over time, and they have diversified their activities. There have, however, also been a few hiccups or setbacks. So, despite the fact that Palantir has been in operations for many years before it went public, those operations, when you add in all the costs, they're not profitable. The cost of doing the business is still higher than the benefit, and this has been on one of the biggest hurdles preventing the company to go forward. Palantir is also having an overexposure in the public sector, making it vulnerable to spending cuts, and also vulnerable to criticism, because, what makes Palantir unique? Yeah, of course, there are the platforms, there's the quality of its software, but it's also because of how much money they spend on, on lobbying, right? The third hurdle is kind of its reputation. So Palantir deals with data, and that will have privacy concerns about how they're obtained and what they can, how they can be used. In fact, the company's mixed reputation has been concerning. Its CEO, Alex Karp, stated that many of their clients kind of dislike the company, but they don't have a choice to work with Palantir. This is not a good news in my mind, and I think that they should make some efforts to improve that brand image in the periods to come. Now, the final issue is that they are in an unfavorable market, like a pretty hostile market trend. So simply put, Palantir, just like many other growth stocks, they need a favorable investment environment in which investors are optimistic about the future. And then they're also willing to spend money to feed that future. So with the looming crisis, raising interest rates, the QT, the quantitative tightening of money, especially of US dollars, as well as the conflicts around the world, this will make people to be more cost aware. Suffice to say that Palantir has been having a lot of downward pressure lately, and those issues will take time to be resolved. In the meantime, the gravitational pull is going to continue, and it goes down. So over the past 5 days, Palantir's price dipped below $7 at the closing of Tuesday as a result of the Fed announcement, probably. Can Palantir dip even lower? that's possible, especially considering that the interest rates are probably going to keep going up in the years to come. Well, sorry, not the years to come, but in the month to come at least. So far, this is not surprising. I would say that the interesting part would be to keep the hope alive while the weather outside remains very stormy. We gotta see where Palantir is going. So the next few days are gonna be important to understand the current dynamic in the context. If we look at the long-term price action of Palantir, we must ourselves determine whether this company will have a place in the economy of the future. So we already know that Palantir will not be profitable for another couple of years. That much is already announced and priced in. We know that Palantir is in a highly sophisticated and technology-driven industry, and that it aims to become pretty much like the analytics dashboard of some of the world's wealthiest entities from both private and public sectors. The true debate is whether Palantir itself, with its technology, can stand the test of time, and whether the market will believe its potentials to become something that's going to be far more adopted in tomorrow's world's economy. Palantir fell by almost 80% from the peak of its share price, from $35 down to $7.28. Most of it is due to overall market trend, and the rest is caused by doubt on the company's growth potentials. Personally, I think that Palantir has been testing its bottom for some time now, and the downward slope stopped its progression for a little bit more than 6 months. Ever since the price reached $8 back in May, the rest of the downward slide is probably just like a habit by this point. So does it mean that the stock will reach new highs soon? No, I don't think so. On the other hand, I do believe that Palantir will have a place in the future, and that its price is due to some significant change in people's mentality for the most part. Given that it's been down by so much, the only logical scenario at some point is that once the storm is behind us, we should see some significant price recovery. Now, let's also take a look at its books. The first thing that we can notice is a positive gross margin. Above all else, this is a very good reminder that a company's core business is working. It is true that the revenue has been growing slowly over the past quarters, sparking some worries from investors. But the fact that the gross profit is positive suggests that the main issue now is the scalability and the diversification of its operations, solving the problem once they reach a critical number of clients. We gotta remember that Palantir's revenue managed to grow, despite the fact that there is a de facto recession in many economies around the world, suggesting that Palantir's clients are both robust and they also seem to be pretty loyal. So, the cash flow reports suggest that despite having a net loss, Palantir can self-finance significant chunks of its operations, with positive free cash flow at the end of each quarter ever since Q1 of 2021. This is significant. That means that the pressure of Palantir to go through rounds of shares dilutions is relatively low. Another significant aspect to consider is the level of liabilities that Palantir has on its books. Currently, there's like $933 million outstanding, mostly constant over time and slightly decreasing even compared to previous quarters. This is very reassuring, as this may suggest that Palantir is keen on having a low leverage. So, with that being said, overall, it may tell us that Palantir is a company that has a business model that can work once it gets scaled up. And also, it's a company that's pretty good at controlling the costs, all things considered. There's around 34% of institutional owners of Palantir shares. What this means is that it's enough to be considered as a stock that you can invest in, but do expect higher than usual like volatilities for sure. This would also suggest that Palantir is good for investment. Now, beware that there will still be people that like to profit off the swings. But in the meantime, you know, if you want to put your money in Palantir for the next 10 years, now might be a decent time to start. Currently, 4.2 million shares are being shorted against Palantir. Some might believe that there is some potential for a short squeeze because those 4.2 million shares need to be redeemed at some point. Now, I think that this is a secondary factor for the time being because the main play isn't really this. The 4.2 million shares, they're not as significant considering the total size of the float. So yeah, like for now, it's something that we gotta keep an eye on, and this is more like a representation of how many people think that Palantir is gonna have it rough before things gonna go north. But it doesn't mean that you should buy Palantir shares for a short squeeze. Overall, I think that Palantir will be able to make its mark in the future and that it's a stock that we should invest in. With that being said, the recent pace of purchase should be slowed down since we are clearly anticipating additional downward pressure caused by the external factors, especially the interest rates. Here's something else. I don't know when the conflicts are going to end, but when the talks begin, when the ceasefire is kicked in, I think that this is also going to bolster the market overall. So the recommended exposure would be between 3 to 5% of your portfolio in Palantir.